Hey, welcome. Today we're diving into a huge economic idea that completely flipped the script on how we think about people at work. It's the theory that says you, your skills, your knowledge, you're not a line item on a spreadsheet. You're actually the most valuable asset a company can possibly have. So let's get into it.
All right, to get us started, think about this really fundamental business question. When a company spends money on training its employees, is that money just gone? Like paying the water bill? For the longest time, the answer to that was a pretty straightforward, yep.
And right there, you've got this huge clash of ideas. The old-school accounting view saw any money spent on people as what's called a sunk cost, basically money out the door that just lowers your profit. But then this completely new economic view came along and said, hold on a second, that's not a cost, that's an investment in a capital asset.
To really get how big of a deal this was, we've got to look at the world before human capital theory. In that world, any money a company spent to develop its people was seen as nothing more than a business expense.
I mean, really think about that. If every single dollar you spend to train your team just looks like a number that's dragging down this quarter's profits, how eager are you going to be to do it? This sunk cost way of thinking was a massive barrier to investing in people, because once you spent that money, it was considered gone for good.
But then a truly groundbreaking idea came along, pioneered by a couple of Nobel laureates that would completely change the game for modern economics and management.
And this is it. Human capital theory, from economists Theodore Schultz and Becker. They basically said that a person's knowledge, their skills, even their health, these aren't just personal traits, they are a form of capital. And if you invest in them, just like you'd invest in a new factory or new software, you're going to get real, measurable economic returns. This is the idea that turned employees from a cost of labor into a strategic asset.
Okay, but the theory gets even cooler. It doesn't just stop at this big, grand idea. It gets super practical and answers a really important question. If training is an investment, who should be footing the bill?
So Becker broke it down into two different types. First up, you've got general human capital. These are the skills you could take with you absolutely anywhere. Learning to code, getting your MBA, public speaking. The logic here is pretty simple, right? Since you, the employee, can take these super valuable skills and walk right over to a competitor, you're the one who should invest in getting them, maybe by taking a lower wage for a little while or paying for your own degree.
And then, on the flip side, you have firm-specific human capital. This is stuff like learning a company's unique in-house software or memorizing some super complex internal process that only exists at that one company. Since those skills have pretty much zero value to any other employer, it makes total sense for the company to pay for that training, because they're the ones who are going to get all the benefits.
And here's the thing. This isn't just some abstract philosophical idea. Nope. It actually gives us a clear framework for figuring out if an investment in a person is, actually going to be worth it.
It's basically a classic cost-benefit analysis. First, you add up all the costs, and that's not just the obvious stuff like tuition, but also the opportunity cost of the money you're not earning while you're studying. Then you project out the benefits, the total bump in your salary or productivity over your entire career. So if a certification costs you $5,000 today, but it's going to boost your salary by $10,000 a year for the next 20 years, well, that's a pretty smart investment.
All right, but like any big, world-changing idea, this one's got its critics. And the biggest challenge to human capital theory really questions its most basic assumption. It asks this really sharp question. Does getting that college degree or that fancy certification actually make you more productive? Or is something else entirely going on here?
And this brings us to the main counter-argument, which is called signaling theory. Another economist, Michael Spence, argued that education doesn't so much build your skills as it reveals the skills you already have. So in this view, a college degree is basically just a signal to employers that you're already smart and hardworking. It's less about creating talent and more about sorting the talented people from everyone else, which is a pretty different way of looking at it.
But even with those debates, you really can't overstate the lasting impact of human capital theory. It ended up providing the economic why behind so many other ideas in management.
And this shows you just how influential it was. The big strategy theory called the resource-based view, it sees your human capital as the key resource for competitive advantage. The famous Hackman and Oldham model for designing jobs, it uses things like skill variety specifically to unlock that human capital. And it's the total opposite of an old idea like Taylor's scientific management, which tried to make workers less skilled. This theory shows exactly why that's a dead end.
It really all comes back to this amazing quote from the economist Alfred Marshall, who was a big inspiration for Becker. The most valuable of all capital is that invested in human beings. It just perfectly captures the whole idea, doesn't it?
And the takeaway here is massive. This wasn't just some theory for a textbook. Human capital theory literally changed the global economy. It gave governments and companies the solid economic reason they needed to pour money into education and training. It made the case that the best, most sustainable way to grow any economy is to invest in its people.
So this leaves us with one last thought, and it's a personal one.
If your knowledge and your skills are your most valuable asset, what's the next investment you're going to make in yourself?